What's going on, everybody? Welcome to another episode of The Remote Real Estate Investor. I'm Michael Albom, and today I'm joined by my co-host,
the lovely Emil Shore.
The lovely, self-proclaimed lovely Emil Shore. And today we're going to be talking about rents. Where are they going? What are they doing? What can you expect in the near future? So let's get into it. Alrighty, Emil, where do you think? I've got an article here. It's from CNBC. Talking about where rents are going in the near future, what they've been seeing, what the market's been doing. Where do you think they're going? Up, down, sideways, no change? Your prediction?
I think they're going up. I don't think they're going to go up as fast as we've seen in the last year, which has been pretty astronomical. But I think they're going up. Inflation is here. Rents have been going up with it. There is a supply crunch in housing. All those things to me mean rents will continue going up because it takes a while to build new housing. Supply is slow to come to the market. Builders aren't building like crazy like they did before 2008. So, all those signs to me point that rents are going to continue going up, although I don't think at as quick of a pace as they have over the last 12 months.
Yeah. When you say that homes take a while to build, I mean, you're clearly someone that has never played The Sims before, because we should just get like all those construction crews out here, like just pop them up all over the place.
That's right. I wish it was that easy. Maybe like prefab homes, they can just start plopping them down. But, even those built to rent community, everything I've read, and again, you're reading stuff, take it with a grain of salt, but everything I've read, it sounds like builders are much slower and hesitant this time around because a lot of them still remember the after effects of leading up to 2008, where they overbuilt and then they were left holding the bag with all these developments. So what I keep reading is demand is high and they are very, very slow and methodical building new supply. Plus there's a lot of regulation and restrictions, I think, in a lot of places that are preventing new housing, preventing it from going up quickly. So I think all those factors, again, I'm not an expert, but just based on what I've read, supply is not going up as quickly as people hope it would.
Yeah, that makes sense. And I mean, I know that you're a very well-read person. I'm curious to get your thoughts, shaking your head. I'm curious to get your thoughts on how did we get here? I mean, how did we get to such, I was talking with, I forget who I was speaking with, but they were saying like we're 5.5 million homes shy of where we need to be. How did we get here?
Again, I am no expert. I read stuff on, my Apple News app. I read it on Twitter.
Reddit,
I think it's
Facebook.
the same thing I'm talking about, right? I think after 2008, when there was a lot of overdevelopment, supply, like all these charts you see like building, new supply going up fast, leading up to 2007, 2008, and then it just falls off a cliff. And since then, it hasn't caught up. It's been a very slow build. I don't think we've even caught up to those 2007 levels of new build. So it's just been really slow. Again, I think it's just a lot of builders probably got wiped out. A lot of people still remember that time. So it's been slow, is my understanding.
Yeah, I totally agree. I think that we're seeing that lag. There's like the lead and lag measures, and this is our lag measure of like stuff isn't being built fast enough, nor was it being built fast enough over the last decade or so. And so now we're feeling the squeeze. And I think that's compounded with supply chain issues and lumber issues. I mean, lumber has gone up like 300% over the last 18 months, I think, something outrageous. And I know I felt that.
Did it?
Dude.
I thought it went up high and then it dipped. Is it back up?
I think that it is back up. I don't want to be quoted, but I think that it's definitely higher than it was pre-pandemic level. So while you're doing that, I mean, that just goes and adds additional stress and cost to new builds. And so the end prices of those just tend to be higher.
You're right. So, okay, May 2021, it peaked at, I don't know, whatever this index on NASDAQ.com is looking at, 1,600 peak, and then it dipped to in the summer to like 456, and now it's back up to 950. So done a little U shape, not quite back up to that level it was last year, but yeah, you're right.
It's still quite increasing high. I know
Yeah.
when I get my material bills for my development project that the lumber is still expensive as all
like-
get up.
You're like, I know, I'm feeling it.
Yeah. General contractor Emil told me that the lumber prices have actually come back down. So yeah, we'll just work that in the budget. So in this article that CNBC came out with, they quoted a CoreLogic study that CoreLogic did, and they surveyed single family rents over the course of the year across the country. And in August 2021, they jumped and more than 9% on average from year prior, which if you think about it is like outrageous. If you think about getting 9%, 10%, 8% rent bumps, I mean, in the Roofstock Academy, we have our pro forma calculator that we use. And I think we use like 2 or 3% for rent bumps in terms of year over year increase. And so we're just keeping up with inflation or just beating inflation because we normally use 2 to 3% for inflation. So we're just outpacing. I mean, this is blowing the socks off inflation. Even at 5-6%, what inflation's been the last couple of months, this is still significantly better. So Emil, you and I were talking before we started recording here about what this says for the future of investors, for investing in the space. I mean, what does this signal to you? 9% rent growth. Granted, we've seen prices climb like crazy. What are you thinking about the future, your kind of near to midterm investment horizon?
I mean, to me, if I was investing now, I'd be feeling really excited. I feel very excited having had bought real estate years ago and now it's gone up. That's the best time to buy was years ago. And when's the best time to buy is now, which can always be said over a long enough time horizon. But
right.
Yeah, man, if I'm an investor and I see that rates are increasing and they're doing these studies and, reputable sites like CNBC are talking about this stuff, no one ever really knows where it's going. But if I was an investor, I'd be pretty excited knowing rent's going up.
Yeah, I feel the same. And I mean, I think this is also not a fad, and this is not this does not seem like it's going to be short-lived. If we are millions of properties shy of where demand is, both on the home owner side, that just means that people are going to continue to rent for a long time until that is caught up with. And 9% is nothing to scoff at. And so
let's talk about I'm curious, do you still own some single family still?
Yep.
Have you had any come up for lease recently versus your multifamily? Like I have a triplex and it's been a little bit harder than expected to rent recently. And all my single family stuff, like we've been able to get rent bumps and renewals like fast, no problem.
Yeah. So my single family that I have on a long-term lease in Southern California has not come up for renewal. They're dealing with some COVID issues still. So we're working with the tenant there, but they're month to month right now. But my primary residence that I converted to a short-term rental during COVID, that we were getting awesome rents on a short-term basis. And then we actually got that rented out on a year-long lease at the same rent we were getting from the short-term renters for our long-term renters for a long-term contract.
Wow.
And now we just put utilities on them as well. So we were just over the moon about that. And so the demand is seemingly through the roof, which is awesome.
Yeah.
And so again, I think that speaks to your point of like, it's still a great time to invest. Demand is still really strong. Even if you have to compete and kind of elbow your way into the space, it seems like the rent growth is there to support it. And I'm curious, Emil, to get your thoughts. If you're evaluating a property and it is just about cash flow neutral, maybe a little bit of cash flow, but you with a 9% or even 8% or even 7% rent growth, it would kick you over into the cash flow positive fairly significantly. Is that speculative in your opinion? Is that counting on an appreciation or counting on a trend to continue for it to make sense? Or are you okay because of all the data supporting that?
Yeah, I personally wouldn't. I would never personally purchase a property where I'm either cash flow neutral or negative today in hopes that things go up. I'm only buying something that's going to cash flow and then hoping we get more cash flow, right? Not the other way around. I know investors, we've done webinars and stuff who completely have banked on appreciation, or not even appreciation, buying in areas that have appreciated and looking for mispriced homes, right? Below the median in that area. That's a great, I mean, honestly, if you really look at like, it's way easier to make a larger sum of money going that route than cash flow. Cash flow is like a slow trickle.
Mm-hmm.
But for me, I never want to come out of pocket on a monthly basis on any property.
Okay.
Or consistently come out of pocket every month.
All right. What if it was like $25? You know, you do your conservative underwriting, you're going to make $25 a month. And then with the rent growth or potential rent hike for next year, you'd be at, call it 150.
Only if I knew a renewal, like let's say it was a property. I did this with the triplex. I knew it was cash flow positive when I bought it, but I knew we were under market rent. Yeah, we'd have to spend some money, but even factoring that in, we had some nice room to raise rents from where the market was at. And this is a year ago. And so like we've had, you know, rent growth. So it's going up even higher. So if you're buying it under that assumption, right? Not that it's at market rent, you think, okay, it's going to go up another 8-9% next year. I'd say if you're looking for something that has like a little more value add on it or whatever, under market rent, then that's a different game. Sure. That makes sense to me.
All right. Good to know.
What about you?
Yeah, I don't know. As I asked the question here, I am thinking like, oh crap, I hope Emil doesn't ask me. I think that I would be probably more okay with it than it sounds like you would be. Because
why?
The thing that I think people often forget about is like all of the benefits that owning real estate afford you. And tax benefits is massively impactful. And especially for me at this stage in my investing career. And so cash flow, I mean, I'm so fortunate and so thankful that $150 a month cash flow is not going to change my life. I spent the last 10 years building up cash flowing properties to be at this stage in my investing career in my life. And I never try to lose sight of that. And so the difference between 150 versus $25 for the potential of appreciation and for the potential of rental increase, I think I'd be okay with that. And this just kind of goes to show you, to all of our listeners, like it really depends on where you are in your investing career, what your investment thesis is, that Emil and I can be talking about the exact same property. It could be a go for me and a no-go for him. And so just, again, I think this is a great kind of teachable moment of like, think about what your investment goals are, not about what your neighbors are or what mine are, or what Tom's are, or what Emil's are, but think about what makes sense for you and your family when you're thinking about investing. So I'll get off my soapbox now, but when I go to calculate like the total return on that type of property where there is good appreciation potential, there's maybe a little bit of cash flow, I think that could make a lot of sense for me right now.
Got it. Yeah, that's fair. I mean, I think the awesome thing we've seen with this podcast is, you know, we bring on different guests doing different things, is like there's a lot of ways to win in real estate.
Totally. That was our episode, everybody. Thank you so much for listening. Hope you enjoyed it. We love hearing comments, feedback from you all, other episode ideas, things that you want to learn more about, hear more about. So leave us a note in the comment section. And as always, we look forward to seeing you in the next one. Happy investing.
Happy investing.